Hi, my name is Jackie Stratton. I'm a realtor licensed in the state of Michigan. Welcome to Keeping It Real About Real Estate, where we will get into real issues when purchasing homes. I'm here today to discuss a little bit about the first process in getting started when you're looking for a home. A lot of people call me and they want to right out of the gate start looking at homes, and there's a process. And so Chris is a mortgage officer, and I'll let him kind of discuss that.
I am Chris Delorso, licensed mortgage loan originator. And the biggest thing about getting your approval process started is, people don't always know what the difference is between a pre-approval and a pre-qualification. A pre-qualification is you have a very casual conversation with a loan officer. You tell them your income, your assets, and they probably pull a credit report, and they just tell you approximately what you could qualify for. An actual pre-approval is documents are collected, account numbers and everything are verified, and it's turned into an underwriter, and they give you an actual approval. The reason that's really, really important is, there's always little things. There's no cookie cutter borrower. There's no cookie cutter person with the same situation as everyone else. Everyone's a little different. So we want to get you a full-blown approval so that you know what your maximum buying power is. And that's really important when interest rates are changing like they are currently.
Mm-hmm. On the real estate side of that, when you go to your next step to actually writing offers on a home, the seller realtor will be looking at all those different types of documents that came in with the offer. And if you are only pre-qualified, then that is a negative effect. If I had the listing, I probably would send it back because they weren't already pre-approved, because that can later down the road really cause a lot of problems and actually cause a transaction to fall apart. The next thing that I think people should know about would be the different types of financing. And since Chris specializes in that, we'll let him discuss the different types.
Well, again, in a market like this where rates are changing, the economy itself is changing, people are starting to ask me, do I have to put 20% down? While it does help to have a big down payment, it'll keep your payment down, it'll help you avoid paying PMI, it is absolutely not necessary to put a full 20% down on a home. We have different types of programs that you can put much smaller amounts, anywhere from maybe even 3 to 5% down. It does work for a lot of clients.
Another options on financing, I find I have people coming to me that want to know FHA mortgages. How much down do I need? What is the percentage rate? Different things like that. Does it have PMI? And then there's another mortgage that people also ask me about, rural development, that they're looking for those types of mortgages. So if you could maybe just touch to those a little bit.
I'm glad you brought that up. That's why it's important to deal with somebody who is what they call a seasoned or a long-term loan officer, somebody who's been in the business and does all these types of mortgages, because the guidelines are different on all of them. FHA is very, very flexible. Generally, the interest rate's going to be about the same as an agency or a conventional loan. They have bigger flexibilities with where your down payment comes from. They only want 3.5% down, but it doesn't even have to be your own funds. We can talk about gifts, things like that. They allow more seller concessions if the sellers could possibly pay some costs for you. With rural development, it is limited to certain areas, but they do offer a zero down option, and sellers can still pay some concessions or pay some of your closing costs for you. So, knowing your options is the absolute best way to go.
Another situation that I've had come up just recently because of the interest rates climbing, I've seen a lot of my clients buying their points down if their credit isn't quite where they would like their payments to fall into. So there is that option as well, and I'll let Chris go over that.
Yeah, I'm not necessarily seeing people paying a ton of points, but a point in itself is 1% of whatever your loan amount is going to be, and that will buy your interest rate down for the life of the loan. We've been very, very spoiled that rates have been very low for a long time and people weren't doing that, but I am seeing some of that, and I can certainly explain that to people if they want to talk about that. The other thing that I'm seeing is people starting to stray from the traditional 30-year fixed. A lot of people don't think that the interest rates are going to stay where they are right now. They think that they might come down sometime within the next 5 to 7 years. So I do have some people looking into 5 and 7 year ARM mortgages where that interest rate is fixed for that entire time. Your payment can't change until that 7 or 5 year period is up. So that's another thing you can talk to a good loan officer about.
One other thing that comes to my mind about the financing is I will have a lot of people want to go to their local credit union or a local bank. Sometimes they're big banks, sometimes they're just small town credit unions. Sometimes those can hold up a sale. So sometimes realtors, we're looking at that, who actually is going to be doing the mortgage, and so that is a situation that can come into play. And maybe Chris can explain to us a little bit what would be an advantage to working with a bank versus a credit union versus a wholesale mortgage.
Yeah, for sure. So everybody's got a little bit different of a philosophy. We all have the same guidelines, but some companies put in what are called overlays to where they might want to be a little bit more strict. Some companies might be a little bit more loose. The best thing that you can do is find somebody that you're comfortable with, ask them a lot of questions, and usually they'll let you know what kind of mortgage based on your credit and income scenario you should be looking at. Me personally, I work at a fairly large mortgage bank. They are dedicated to closing loans, and the underwriters answer the phone when I call them. So I find that very, very helpful to be able to have a direct line to the underwriter. If there's a weird scenario, you need to have somebody that's willing to go the extra mile to try to overcome things.
I've also noticed, being a realtor and to work with my clients, they work daytime hours, and a lot of times we're out on the weekends seeing homes, and sometimes we have to write an offer right then. There could be multiple offers, and maybe we need an updated pre-qualification or pre-approval. So I have to rush around and find the lender. Well, let's say they're at your local credit union. I can't get a hold of Sally at 4 o'clock on a Saturday or Sunday,
or 9 o'clock on a Thursday.
Yeah,
being available, again, having a dedicated loan officer that keeps the phone by his or her side at all times. It's important. I find myself checking my messages, my texts, and keeping my phone on me so that if somebody does need something at 9 or 10 o'clock at night, I'm able to help them.
That's another key for me as a realtor. I want to work with lenders, mortgage officers that are accessible to me as well, because sometimes I have questions, and if I can't get a hold of the lender, then I can't sell houses. So that is one good thing about Chris, is that he is very good about returning my call if he can't get it, or returning a text. Even on his vacations, whatnot, he's always staying in contact with me when I need him. So that is why, as realtors, sometimes when we have clients come to us that are not pre-approved, we will recommend a couple to them that we know are there to service them, and they are also there to close homes. They want families to get into the homes, so that is a big important part for me personally as a realtor.
Yeah, I think that people develop relationships and they learn. They get a hard knock education sometimes if you're dealing with somebody that isn't returning phone calls, which is bad enough. But if you find somebody that really isn't motivated to close a deal, to find a way to make it work, that's the most important thing, is we're all working together to get this person into this home. We can find a way to make it work. And a lot of times it's just asking the right questions and and trying to put your nose to the grindstone and figure it out. We always try to figure it out, right?
Yeah, very much. Yeah, everyone's not built the same, and that is very true for mortgage officers. Sometimes if we have a situation with a bad appraisal and we need to work together as a team sometimes to try to overcome some hurdles and come up with solutions to try to get the buyer into that home and make everybody happy. So one other thing that I did want to mention about loans or ask your opinion on.
Sure.
Sometimes I have veterans come to me and they have their veterans mortgage that they have available for them to use.
Sure.
And
VA eligibility.
Yep. And I have had some people that have not used those benefits and maybe went with a conventional mortgage. Could you maybe touch on why that might be?
Yeah, that's a great point. So veterans loans are really, really awesome. The biggest point about a veterans loan is that you don't have to put any money down and you won't have PMI. Traditionally, if you don't put at least 20% down, you're going to have PMI on most loans. The VA loan allows you to waive that. On the same note, if you are putting a big down payment down, you don't need to use the veterans loan. Even if it is your first time using the VA loan, you are going to pay some origination costs to VA. Now, you really just need to weigh, am I getting a better rate? Are the closing costs going to be better? Is it worth it to pay this VA origination cost, or should I just do a regular conventional
Is
loan?
it actually about $10,000 that the veterans? I've seen it on closing documents where it was like a $10,000 fee to the VA.
It's a percentage. Typically, the veterans loan is somewhere in that 2% range for a first time, and it goes up after you've used it subsequent times, is what the wording they use. But
Gotcha.
yeah, so it's a percentage of whatever the loan amount's going to be.
And I've also had a lot of people that are veterans think that once they've gotten a veterans loan that they can no longer use that it's maybe like a one-time deal, and that's not the case.
It's definitely not. You can use your veterans loan multiple times. The cost stays the same after your first time, so it doesn't keep going up, but you do have that veterans like an origination fee type thing. I would also say I've had a lot of people confused about veteran loans because there are companies out there that call themselves veteran homes loans or something similar to that. Any lender out there that is certified as a VA lender can do your VA loan, and you definitely should shop around and make sure you're getting the best veteran deal, just like every other deal.
One last thing that I'm going to mention about the veterans is that I have had some people come to me that are veterans and they are not prepared to use that benefit that they have, and there are some certain documents that they need to have in order to get that benefit mortgage. So I believe that's called a DD-214.
The DD-214 allows us to get a certificate of eligibility, or if you're in the military, everybody wants to use acronyms, it's a COI. So the DD-214 will allow us to get the COI. It's not a hard process, but it's definitely, you want a legible DD-214 to get your VA loan.
And to finish off, I would just like to point out one thing. Many times I have people reach out to me and they want to go right out and look at this house. They just call me and they've seen a sign and they want to see it. Maybe it's a $200,000 home, but they're not pre-approved yet. As a realtor, I can't just go show people homes that are not pre-qualified for a certain amount. So that is the most important thing when we're starting to work with a realtor, is knowing what your price range is. Be comfortable with what your monthly payment would be with that price range, and just make sure that you're comfortable with that. But it's really not a good idea to jump into seeing homes until you have that pre-approval amount. Number one, you could fall in love with a home, and then you're going to go through a lot of heartbreak. Number two, it's wasting your time and my time and gas. So that being said, I can't stress enough to you to get your pre-approval first thing. That's the first
you,
step.
you don't want to find out you've got some weird surprise thing on your credit that you didn't know about, or you don't want to find out that you just switched jobs and now you're considered self-employed or something and we can't use your income. So those kinds of things are going to help you not get heartbroken if you do find a house that you absolutely love. And we've seen it happen multiple times.
Many times, yes. Just one last thing. So just to recap, we have conventional mortgages, VA mortgages, FHA, RD.
Yep.
And those are pretty much what we're using. So when somebody asks you what type of mortgage you're getting, that's what we're talking about. Is there anything else, Chris, that you could touch on? You think that's important?
No, I just think that knowing what your options are, asking a lot of questions, and being comfortable with who you're working with, both on the real estate side and on the lender side. It's all about finding someone that you can be comfortable and happy with.
Right. Well, thank you, Chris, for
Absolutely.
explaining us the different mortgages, and I look forward to working with you a lot.
Awesome.
Thank you.
Thank you.
Thank you for watching and listening to Keeping It Real About Real Estate.